Some of y'all been asking me for well over a month, what do I think about Lawrence Hardge, his relationship with Mullen? I'm going to talk about that at the end of the video. But first, let's get through the Q1 financials. You might have already gone through the financials on another channel, so I'm going to keep it brief and just talk about the couple of small things that I want you to know about that is on the Q1 financials. Let's get right into it. Mullen dropped their earnings yesterday, May 15th. Today is the 16th, so we're only one day behind. I spent the better part of the day today going through this, reading through everything. A couple of questions came to mind that you might not have heard somewhere else, so you want to be sure and pay attention, and we will keep this as brief as possible. If you haven't watched my video that dropped earlier today on why the price of Mullen has been dropping, I'll put a link right up here as well as in the video description. Be sure and check that one out too. As you guys know, if you're investing in Mullen, they, as I said, have a history of missing deliverables, missing dates. I don't get excited about any press release from Mullen. You're never going to hear me make a daily video on Mullen hyping up the latest press release because they just haven't earned it. But let's talk about a couple of things that are on here. The MGT lease, don't care. Randy Marion ordered $279 million in Class 1 and Class 3 EV vans, don't care. Lawrence Hardge, don't care. I'll talk about it at the end of the video though and tell you why. On the good side, they're saying that they expect some deliveries and revenue of the Class 3 trucks in August and September of 2023. July 2023 production, we will see. They haven't met too many deliverables or dates yet, but we'll be watching. And further down, speaking of dates, MULN 5, remember when they said it was going to be mid to late 2024 for deliveries? In fact, it still says that on their website if you go try and reserve one of those cars. What do we get on this update yesterday? It says here that the vehicle launch will first be the MULN 5 RS with production in December of 2025. Customer sales in mid-2026. That's a freaking 2-year slip. MULN Go, don't care. Where's the revenue from it? You're going to see that there's been none, even though they've been hyping it up for 6 months or more now. All right, on the 10Q, let's dig into a couple quick things that you need to know that are on here. This is for the quarter ending March 31st, 2023. Loss from operations, $67.89 million. What is missing from this statement of operations? Revenue. There's no top line revenue here at all. And there never has been any for Mullen. And I know this caught a lot of people by surprise because you're seeing a lot of press releases from Randy Marion and from David Michery and Mullen, and you thought vans were being sold, but they are not telling you the exact truth, are they? Be very careful about what you believe from any press release, any YouTuber, or any Twitter account. Until you see it on a financial statement, that income is imaginary. Net loss to shareholders for the quarter, $114.9 million or $1.30 per share. Moving on to the balance sheet, Mullen ended the quarter in March with just over $60 million in cash. Total current assets, $98.9 million. Total current liabilities, $121 million. The current liabilities are what they need to pay in the next 12 months, and you want more current assets to pay them, especially cash or cash equivalents, and they don't have that. So there's going to be more dilution or more debt in Mullen. Get your antenna up now and be ready for it. They only have $60 million in cash and $121 million in current liabilities. There is a problem headed your way on this balance sheet, and it's going to be solved by dilution. Retained earnings or accumulated deficit at the bottom of the balance sheet, $1.38 billion. And that being negative, obviously, is showing that you have a bunch of accumulated losses over the years, totaling up to $1.38 billion. If we look back at last quarter's balance sheet, you'll notice that there was this $93.8 million notes payable. And you might think that since it's not on this balance sheet, that Mullen did a great job managing the cash and paying off the debt. I got one little surprise that I want to point out on what happened to that $93 million, and it wasn't due to excellent cash management. If we scroll down to note 7 and read about the debt, we get the real details here. And on the bright side, that $90 million is not on the balance sheet anymore, but on the bad side, it was through dilution, not through use of cash to pay off the debt. The debt holders just traded the debt for equity, and then they sold that into the market, massively diluting the common stockholders. It's done. At least that is off the balance sheet now, and balance sheet improvement is important. And while we're talking about liquidity and capital, I want you to go read note 2 underneath the financial statements. What I have highlighted in green here for you, it says that under existing security purchase agreements dated June 7th, 2022, the company has sold Series D preferred stock and common stock, as well as detached warrants for $45 million, and continuing on to the next page, may obtain additional investment in the amount of $45 million under similar conditions by June 30th, 2023. And I just wonder if that might have something to do with this press release that he put out back in February talking about $110 million firm commitments by June 1st, 2023. The dates don't exactly line up. The dollar amounts don't exactly line up. He said 110 here. We just saw 90 million in that note number 2. But I think that these two things could be related. At the end of the day, this is more potential dilution for the common stock because these Series D preferred stock can and will be converted into common. We're just about ready to talk about Lawrence Hardge, but before I do, just a couple things to point out. A little bit odd on the cash flow statement. Cash flow from operating activities, negative $67 million. Net cash used in investing activities, negative $97 million. Net cash provided by financing activities, $167 million. There at the bottom, we got cash at the beginning of the period, $84 million. Cash at the end of the period, $86 million. It looks pretty good, right? What I want you to notice is at the top right that they're comparing the 6 months ending March 31st. Why didn't they do the 3 months ending March 31st? That always kind of gets me digging a little bit further. Let's look at what were the numbers on the last quarterly statement. When we pull up the 10K, the one that had the cash ending at the end of December 31st, and go to the bottom, I have it highlighted here in green. The cash at the end of December was $107 million. And if we plugged that in, instead of using 6 months, if we had just done 3, this would have said cash at the beginning, $107 million, cash at the end, 86, and we would have had $20 million cash used. Instead, by using that little finance trick and showing you 6 months instead of 3, it looks like they increased their cash by $2.3 million, but that is not what happened, my friends. That is all we need to go through on the financial statements. Everything else doesn't really matter until they book some revenue. You know that this company is going to be in cash raising mode, either through dilution or debt. And they say that they are going to have some vans or class 1, class 3 sold this year. We'll see. It's not going to be enough to offset the losses that they have, but at least it's better than having no revenue, right? Now let's talk about Lawrence Hardge. What do I think about Lawrence Hardge? I've been watching this very close, and I've been trying not to say very much. What I really want to see is some real engineering reports, not a Facebook Live or a Twitter Live. I want to see the actual data, Mr. Hardge. But you guys have seen the results that Mr. Hardge posted about the Chevy Bolts, the increase in the battery capacity or the battery efficiency, maybe would be a better way to say it. Same with the vans. Now, you can go out there, I did, and find people who have a unmodified Chevrolet Bolt that got the same performance. So is his device really doing anything? I don't know. I can't tell you until I see a real report, and I just don't believe much that this company says until I have the data in my grip. Am I a battery expert in the automotive industry? No, I'm not. I have worked with battery technologies. I have worked in manufacturing. Besides my economics degree, I do have a 2-year degree in electronics, and I worked in the high-tech field doing engineering work, managing electrical and mechanical engineers for 15 years. So maybe I'm a little bit knowledgeable in the arena, and what I want to see is the actual damn reports. Until then, just smoke and mirrors as far as I'm concerned. I've already got a whopping $50 on the line invested in Mullen a couple weeks ago, just in case, but I'm not willing or tempted to put any more on a bet on Mr. Harge until I see that data, knowing what I know about what is coming with dilution. $50, you say? Wow, Tony, you really must not believe in Mullen, and you would be correct, sir. I do not. This is just my thoughts. You do you. I'm not going to hate, but I think there's plenty of time to wait and get Mullen much cheaper than the current price. In the meantime, if there's a little pop, I've got a little money on the line and I will sell it into any run up and wait for the price to come back down, rinse and repeat. Even if they get some vehicles into production, it's not going to be enough to offset any losses, and they have a lot of competition out there, high interest rates, and prices are coming down from the likes of Tesla. The economy is under stress, and we know that the MULN 5 now has got pushed out to 2026, my friends. I am Tony Denaro. Don't forget to buy and hold that subscribe button if this is your first time here, and I will see you on the next video.